One venture capital firm is pouring billions of dollars into shaping what the next decade of technology looks like, and a growing number of people are asking whether the future they're building is one anyone actually wants. Here's what Andreessen Horowitz is betting on, and why the tech community is pushing back. Andreessen Horowitz, known as a16z, isn't just any venture capital firm. Founded by Marc Andreessen, the man who built the first widely used web browser, and Ben Horowitz, the firm has become one of the most powerful forces in Silicon Valley. They've backed Facebook, GitHub, Airbnb, Coinbase, and hundreds more. When a16z writes a check, it doesn't just fund a company, it signals to the entire industry where the future is heading. They manage tens of billions in assets, and their investment thesis shapes what thousands of startups try to build. Recently, they've gone all in on three major categories: artificial intelligence, cryptocurrency, and Web3, and defense technology. A detailed analysis of a16z's portfolio published today on Model Republic is generating massive discussion in the tech community, with over 250 upvotes and 90 comments on Hacker News. The article maps out where a16z's billions are actually going and argues that when you connect the dots across their investments, a pattern emerges, one that critics say optimizes for surveillance, automation of human labor, speculative financial systems, and military applications, while deprioritizing investments that might address climate, healthcare access, or public infrastructure. Now, to be clear, this is one editorial interpretation of publicly available investment data. A16z themselves frame their investments through what they call techno-optimism, a belief that technology inherently makes the world better and that the market should decide which innovations succeed. The tension between these two framings is exactly why the tech community is so divided on this. Here's how venture capital actually shapes the future, and why this matters beyond just finance. When a firm like a16z invests $200 million into an AI company, that company can now hire hundreds of engineers, acquire data, and scale rapidly. Competitors without that funding fall behind or die. The surviving companies then set industry standards. Multiply this across hundreds of portfolio companies and you get a firm that isn't just predicting the future, it's actively constructing it. The critique isn't that individual investments are evil. It's that the collective portfolio reveals priorities. When billions flow toward AI that replaces workers, crypto speculation, and autonomous weapons, but comparatively little flows toward affordable housing tech, clean energy breakthroughs, or open healthcare systems, critics argue we're getting the future that makes investors rich rather than the future humanity needs. Supporters counter that market-driven innovation historically delivers more progress than central planning, and that technologies like AI will eventually benefit everyone through cost reduction and capability expansion. This conversation matters right now for three reasons. First, we're at an inflection point with AI. The companies being funded today will likely dominate for the next decade, so what gets funded now determines the AI landscape we all live with. Second, a16z isn't operating in a vacuum. Their investment thesis influences other VCs, corporate R&D budgets, and even government policy. When a16z went heavy into crypto, the entire startup ecosystem followed. When they pivoted to AI, hundreds of crypto startups lost funding overnight. Third, the Hacker News discussion, 90 comments and counting, shows that even within the tech community, there's deep disagreement about whether market-driven investment allocation produces outcomes that are good for society broadly, or primarily for a small class of investors and founders. This isn't an abstract philosophical debate. It's about which apps you'll use, which jobs will exist, and which problems technology will or won't solve in the 2030s. The bigger question emerging from this discussion is whether the venture capital model itself needs reform or whether market accountability is sufficient. Some in the Hacker News thread argue for more public funding of foundational technology research. Others say competition between VCs already diversifies outcomes. What's undeniable is that transparency about where investment dollars flow and what futures those dollars create is increasingly something the tech community demands. Whether you agree with a16z's vision or not, understanding where billions are being directed helps you make better decisions about your own career, the tools you adopt, and the companies you support. The link to the full analysis is in the description below if you want to dig into the specific portfolio companies yourself. I'm curious, do you think venture capital firms have a responsibility beyond returns, or is the market the best mechanism we have? Let me know in the comments. If you found this useful, subscribe for daily tech analysis that goes beyond the headlines.